Hello, everybody, and welcome to the 64th edition of LM's Weekly Wrap, our weekly program to cover the market related developments. We start off with a roundup of the international developments. I think the global markets, it was a very important week for the global markets, US markets, particularly because of the US FOMC meet. And on expected lines, I think the US Federal Reserve has indicated its commitment to fight inflation. They have indicated that there's going to be one more rate hike, and they have hinted that one should not expect any reversal in the rate cycle till June 2024 at least. So the roadmap, the path seems to be very clear at this point of time, that high interest rates are going to be a reality, at least as far as the near future is concerned. What this means for the US consumer is that essentially they'll have to pay higher prices for swiping their credit cards on the loans, etc., with which they buy consumer durables, essential necessities, etc. Housing also likely to become expensive on account of the higher interest rates. Car loans are going to become expensive. So I think this is going to put a burden on the consumer. This coupled with the fact that the crude oil prices are at $94 a barrel, and the food grain prices have been going up across the globe on account of the geopolitical tensions. So I think overall, to sum up, the inflation expectations are going to be high. The inflation is going to be on the higher side. The funds are not going to be available easily because the cost of funds is going up, as a result of which this is likely to curtail consumption in a certain way, which is likely to bring down inflation too. So this is the what the policymakers have been expecting, a moderation in the consumption going forward, and overall trying to tame the inflationary pressures. So this is the global scenario. We've seen, as usual, expectations which were there from the US Federal Reserve meet, and the tech stocks reacting negatively to this. The tech stocks have come under a lot of pressure on account of these developments, that is the rising interest rates. So I think we've seen the impact of this all on the domestic markets also. During the week, we started off with the dollar index crossing the crucial 105 levels. The 10-year benchmark bond yield has crossed 4.5%. So I think it looks imminent at this point of time that some amount of FII selling is bound to happen in the markets. With higher interest rates, it's likely that the funds will move from the emerging markets. There's likely to be some selling pressure in the emerging markets, and exactly on the similar lines we have seen such things take place in the domestic markets. In the domestic markets, I think we started off the week with on a slightly shaky note, because we had the analyst meet of HDFC Bank, and markets became very cautious post this analyst meet, and we've seen selling pressure in HDFC Bank throughout the week, and in the last 5 sessions we've seen a market cap of close to 1 lakh crore being erased from the price of HDFC Bank. HDFC Bank, one of the biggest losers of this week, down about 6.5% in trade. HDFC Bank, along with Reliance, pulled down the market. Subsequently, we saw pressure in SBI, we saw pressure in ICICI Bank, and all this has resulted in the markets coming down. Metals were also under some sort of pressure in the markets. So overall, I think it was a very shaky market till today morning. We got the news of the JP Morgan emerging market India inclusion. So the Indian government bonds will also be eligible for the inclusion in the emerging markets bond inclusion. And I think this is likely to result in an inflow of close to $25 to $50 billion starting from January 2024. So this has perked up the sentiments in the market. Today we saw PSU banks were leading the markets, and we've seen PSU banks shine in trade in today's market. Just to sum up the different sectors for the week, I think auto sector continues to do very well. We've seen all companies, different types of companies indulging in different actions. We've seen Tata Motors, which has hiked the prices of commercial vehicles, Maruti, which has given a very strong outlook for the festival season as well as for the October month demand. We've seen Eicher Motors, which has launched their rental program. We've seen Escorts Kubota, which has launched their NBFC for funding the customers as well as products. So I think auto continues to be in a very, very sweet space, and auto has been doing well. Maruti has been a big gainer, M&M, Bajaj Auto, Eicher Motors, big gainers during the week. Apart from this, I think in the banking space, the private sector banking space has been under pressure, but the PSU banking space has done exceptionally well. Today, we've seen stocks like Hudco, PFC, REC continue to do very well in trade. We had spoken last week about the under ownership issue in the PSU banks, and I think that is really reflecting in the market at this point of time. Capital goods sector continues to do very well. We have the stocks like Thermax, Triveni Turbine, or Graphite India. All these continue to do very well in trade. L&T continues to do very well in trade. So the infra story is going great guns at the moment. As far as FMCG is concerned, it's been a little bit shaky, but I think a couple of companies, that is Dabur, Procter & Gamble, Hygiene and Healthcare, their presentations made by them have had a positive impact on the markets. Pharma, we've seen the iconic deal which has happened of Glenmark Pharma. They have sold off their stake in Glenmark Life Sciences. So I think today we've seen some profit booking pressure as far as pharma is concerned. But I think overall pharma continues to be a defensive bet in the markets. IT is struggling, as we pointed out, on account of the global developments, but I think Tech Mahindra is turning around the corner as far as this week's movement is concerned, and we could expect the stock to perform better in the times to come. Couple of weekenders have been in the action. I think first is Blue Star. Blue Star, the company has launched the QIP to raise 1,000 crores to fund the expansion, and the floor price has been fixed at 785, the same price at which it was recommended by LM, with a target price of 1,050. The stock continues to rule near the 900 levels. It's seen a good traction in trade. Second disappointment, that is Sutlej Jal Vidyut Nigam Limited, which was recommended by us at 64 with a target price of 90. The stock, after hitting 80, 81, 82 levels, the offer for sale was launched by the government, and the stock has corrected, currently ruling at 73 levels. To the best of our understanding, I think we expect in the near future an offer for sale abruptly could be announced by Midhani Mishra Dhatu Nigam Limited, and we will not be surprised if even Hudco comes up with an offer for sale announcement. So one needs to be a little bit careful as far as these PSU stocks are concerned, as we had already pointed out that there is a lot of under ownership issue, and these stocks could really turn volatile at any point of time. So one needs to be careful in PSU banking space. One needs to be a little bit cautious as far as the railway stocks are also concerned, because the focus is now going to be entirely on the execution side of the business. Defense continues to do well, and overall general PSU category also continues to do well. Lots of things to discuss, but time constraints permit us no further. Do write to us with your queries and observations. One query during the last week has been the absence of my colleague Jash Shah from the program. He's down under the weather, and he's recovering. So hopefully next week he'll be back in action with us. So I think you've enjoyed this program of LM Weekly Wrap. Do write back to us with your feedback. Thank you very much.